Hello, do you want to be a consistent, profitable forex trader? Do you want to be a professional forex trader? Then this video is for you. In our previous lesson, we've learned about the type of candlesticks we have on the forex market and the psychology behind it. We've learned about the bullish candlesticks and then the bearish candlesticks. In this video, we are going to learn about the types of bullish candlesticks and then the types of bearish candlesticks. Don't forget to subscribe to my YouTube channel, comment, share for others to also take advantage of this video. To begin with, we have a bullish Marubozu candlesticks. The bullish Marubozu candlesticks is a candlesticks that has no wick. So market open low and then closes high without any wick formation. This is an indication that the buyers are very strong on the market. So the market has a very huge body without any wick. So you'll be looking out for opportunity of buy whenever you see the bullish Marubozu candlesticks. The next candlestick is the bearish Marubozu candlesticks. Market open high and close low without any wick formation. This is an indication that the sellers are very strong on the market. It does not have wick either up or low. The next candlestick is the hanging man. The hanging man is a type of candlestick that usually forms at the end of a downtrend, which is an indicative that the downtrend is about to end and a possible reversal trend is about to happen. So usually this is how the hanging man candlestick looks like. It has a long wick to the downside and a small wick up there to the upside with the body close to the upside. Market open low and closes high. The psychology behind it is that sellers push the market down to this last price, but because sellers have lost strength on the market, buyers push the market up again to the opening price and then push it up and close above the opening price. So whenever you see this at the end of a downtrend, this is a possibility that the market is about to reverse to an uptrend and you'll be looking out for opportunities for buy. Let's move on to the next candlestick. The next candlestick is called a shooting star. The shooting star has a very long wick to the upside with a small wick to the downside and then the body close to the downside. Market open high and then close low. Usually, the shooting star forms at the end of an uptrend and usually forms at the resistance level. Whenever you see this, it means that the buyers are losing strength of the market and sellers are taking over the market. So you'll be looking out for opportunity for buy. You'll be looking out for opportunity for sell. The next one is the hammer. The hammer has a very long wick to the downside without any wick to the upside. The body is close to the upside. Market open low and close high. Usually, when you see the hammer on the support level, it means that the downtrend is about to end and market is about to reverse to an upside. So you'll be looking out for opportunity for buy. Then we have the inverted hammer. It has a very long wick to the upside with the body to the downside without any wick down to the downside. Market open low and close high. The next one is the spinning top candlesticks. It has a wick to the upside, long wick to the upside, and then wick to the downside as well. Market open high and then close low. We have the spinning bottom as well, which is usually the same like this, just that the color is green. The next one is the doji candlestick. The doji candlestick is an indecision candlestick. Usually when you see the doji candlesticks, it means that there is indecision of the market. The market is neither moving upward or downward. So market open and close on the same market price. Usually when you see the doji candlesticks at the end of a downtrend or at the end of an uptrend, then you know that there is a possible reversal trend to occur. Then you'll be looking out for opportunity to buy or to sell. The next candlestick is the bullish reversal candlesticks. So the hammer is one of the bullish reversal candlesticks that is here. So usually hammer is formed at the end of a downtrend, and then inverted hammer is also usually formed at the end of a downtrend, which all these are indicative that the market is about to reverse to an uptrend. So you'll be looking out for opportunity for buy whenever you see the inverted hammer or the hammer candlesticks. The next one is the bullish engulfing candlesticks. The bullish engulfing candlestick usually forms at the end of a downtrend. The bullish candlesticks engulf the previous bearish candlesticks. Sometimes it can engulf the second and third candlesticks, which are indicating that the buyers have taken control of the market and the market is about to move to an upside. The next one is the morning star. The morning star usually forms at the end of a downtrend on the support level or on the demand level. So usually there is a strong bearish candlestick forms at the end of a downtrend or on the support level or on the demand level, followed by an indecision candlestick, which could be a doji candlestick form. Then after that, there is a strong bullish candlestick, which could be a marubozu candlestick, which could be any bullish engulfing candlestick forming after the doji candlestick. This is indicative that the market is about to move to an upside and you look for opportunity for buy. So this is called a morning star pattern. A morning star pattern. Morning star pattern. This doji can also be spinning top. So usually you have to look at it where it is forming and then the psychology behind it, and then with the combination of other factors, then you look out for opportunity for buy. The next one is the teaser bottom. Teaser bottom usually forms at the end of a downtrend. That is why it's part of the bullish reversal candlestick. It forms at the end of a downtrend. So there is a strong candlestick to the downside, and then there is the next candlestick forms, which is bullish, also opening at the closing price of the previous one and close at the same level the previous candlesticks formed. The next one is the 3 stars in the south. The 3 stars in the south usually forms at the end of a downtrend. Usually, as it moves down to the support level, the sellers lose strength, and as one indicative to know that the sellers are losing strength on the market is that the sell candlesticks begin to shrink. The sell candlesticks begin to be smaller as they move to the support level or to the demand level, and by so doing the buyers take over the market. The next one, we have the bullish straight line strike. And then we have the rising three methods, and then we have the bullish mat hold continuation patterns. These ones, whenever you see them in a bullish trend, then you should know that there is a possible continuation of the upside movement. So the buyers are still in control of the market. So you'll still be looking out for opportunity for buy. The next one is the hanging man. The hanging man. The hanging man usually forms at the resistance level at the end of an uptrend, as I've said earlier on. So usually it forms at the resistance level. So when you see, you should know that the market is about to move to a downside. So you'll be looking out for opportunity for sell. Then we have the shooting star as well, also forms at the end of an uptrend, usually at the resistance level, and then you'll be looking out for opportunity for sell. The next one is the bearish engulfing candle. Usually at the end of a bullish trend, the bearish engulfing candlesticks is an indication that the buyers have lost strength of the market and the sellers have taken over. So you see a strong bearish engulfing candle forms at the end of the uptrend, which is an indicative that sellers have taken over the market. Then we have the evening star. The evening star usually forms at the end of an uptrend and is most effective on a resistance level. So when market is moving on an uptrend and it goes to a resistance level and then an indecision candlesticks form, followed by a strong opposite candlesticks, that is bearish candlesticks, then you should know that the market is about to move to the downside or the sellers have taken control of the market. Then we have the teaser top. The teaser top also forms at the end of an uptrend. So what happens is that markets move strong to an uptrend, to an upside, and then it gets to a certain resistance level, and then it loses strength. The sellers take over. So market then open at the close price of the previous candlesticks. Market open at exactly there and then closes at the exactly open price of the previous candlesticks. That is an indication that the market is about to reverse to a downside. Then we have the advanced block. The advanced block is usually opposite to the three stars in the south, as in the case of the bullish reversal. So the advanced block is usually market moves in an uptrend, and as it approaches to a certain resistance level, buyers lose strength, and as buyers are losing strength, the smaller the candlesticks becomes, and therefore the sellers takes over. So whenever you see this, usually at the end of an uptrend, you should know that the market is about to move to a downside, and you'll be looking out for opportunity for sell. Then we have the bearish continuation pattern. So bearish continuity pattern, these are some of the examples of bearish continuation patterns. So whenever you see this in a downtrend, then you should know that the downtrend will continue. The market will continue to move downward until it gets to a certain support level, and then new confirmation forms to indicate that market will continue or market will reverse. So these are some of the example of continuation of a bearish trend. Then we have the neutral ones. An example is the doji one. We have the we have the gravestone doji, and then we have the dragonfly doji. So these are the types of doji candlestick. We have the gravestone doji candlesticks, and we have the dragonfly doji candlestick. These ones are all indecision. The market is not able to make a decision, as in to move up or down. So by so doing, these doji candlesticks are formed. Whenever you see this, it's very important, depending on where you are seeing these neutral candlesticks. So the doji, the gravestone doji, and then the dragonfly, usually when you see them on the support level or on the resistance level, then you should know that there is a possibility that the market will reverse to the opposite side. So this is the type of candlesticks we have on the forex market. Try and then master everything. Your understanding of the candlesticks form is also part of your success rate of the forex market. Make sure you subscribe once again to this channel, like, and then share for others to take over, and wait for the next video. Thank you very much.